It is long-standing company policy not to comment on M&A rumors and speculation. Comment once, you have to do it always. But then comes along this ducking website. Obviously, the information highlighted in orange did not happen on March 28th. Now, Benzinga posted that AMC was acquired by Amazon on Tuesday, March 28th, and they basically confirmed it in an article, and Adam Aaron is calling them out. He follows this tweet up by saying, many four-letter words rhyme with duck, buck, cuck, huck, luck, muck, puck, suck, tuck, yuck. Can you think of any other four-letter word I forgot to include? To paraphrase the talented and always lively Samuel L. Jackson, I am aghast and angry, Benzinga, you mother duckers. He then follows this up by saying the 2023 award for dumbest, most incompetent website on the planet goes to benzinga.com. While it issued a correction after we shamed them Sunday, I do not see an apology, but that doesn't matter because we would not have accepted it anyway. Shameful, contemptible conduct. What is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel if you're new. Now, April is a very, very important month for AMC, and I want to talk about why. Yesterday, while blasting Benzinga, Adam Aaron stated corrected data had been reported to the main source, but it may take a week to roll through the rest. Now, 1 week from that date would bring us to April 9th. He also tweeted back in January 4974 in the top of his tweets, and a lot of people are saying, oh, the number 4, this and that. This actually comes out to April 9th, 1974, which happens to be the birthday for Alexander Pishkin. If I pronounced that wrong, whatever. This is the infamous quote-unquote chessboard player, and you know Adam Aaron has talked a lot about chess throughout this entire play. Now, there's another theory that Adam Aaron is finally calling out some bad actors because he's being deposed in 4 days, and this may reveal if he is actually sure or if he dodged a share count, so on and so forth. But what do you guys think down below? Do you think Adam Aaron is basically calling out bad actors before he gets called out in 4 days, or do you think he finally has some skin in the game and some evidence to finally throw shots at these different sites and at these different institutions? You let me know in the comments down below. But what I wanted to point out is Adam Aaron's tweets, they are kind of sketchy, right? First of all, they're a little bit cringy, but second of all, it's kind of like icing the cake, showing that, you know, just throw something out there to pretend you're on retail's side. This is the way I see these tweets. They're not anything significant or substantial, and he knows that we know the data is skewed, right? The numbers aren't right, but yet he continues to say that we don't need a share count. The share count is accurate. No extra shares have been issued. He hasn't seen evidence of naked shorting. And then he comes out and says that, you know, these things are Photoshop. And now he's coming at the website for being incompetent, but it's not the website. We know that it's not the website. Sure, if it is, whatever, that's not the problem. The problem is the numbers that are actually fucked up. And he's not looking at the bigger picture. I think he's purposely not looking at the bigger picture. Now, AMC earnings has just been announced. This is coming out May 5th before market open. AMC earnings do not usually come out before market open, so this is going to be a very interesting day following the earnings. Now, keep in mind, even if this case doesn't get dismissed, so on and so forth, there is only 24 days before the ruling for the conversion/reverse split either go through or not go through. The question is, how long do the shorts have to try and keep volatility suppressed with an average cost to borrow over 400%? That is right. Short interest, 25.07%. Shares on loan, 200 million, nearing an all-time high. Utilization is still maxed out, and the cost to borrow average sitting at 454% and a max at 474, which means shorts are paying more than 4 times their position. APE, 5.62% short interest, utilization at 74%, and the cost to borrow sitting right around 10%. Now, before I move on with the video, because we have a lot of stuff to go over, if you guys want up to 17 free stocks, make sure to use my link, sign up for Moomoo, make a deposit so you can start earning free stocks. It's really that easy. You also get access to free level 2 order book, trading options, going long, going short, and more. Also, guys, join the Discord link down below where I am in there on the daily, and you will honestly just up your trading. It's well worth it to hop in there as well. Bed Bath & Beyond. If you guys are in this play, I wanted to touch on it because it has to do with GameStop, has to do with AMC and our quote-unquote meme basket. The fails to deliver lately have been astronomical. Whatever's happening with the overall market, whatever's happening with AMC, GameStop, they really can't let Bed Bath & Beyond run, which is interesting to say the least. Remember when the SPY ran about $3 to $7 and short sellers lost 81 billion? That has not been touched on recently, which is interesting. This just came out. Market turmoil has forced many macro and trend following hedge funds to cut bait on bad portfolio bets and caused at least one bank that lends to them them to scrutinize its clients' exposure, according to sources and preliminary data viewed by Reuters. Sudden collapse this month of two regional U.S. banks and Swiss lender Credit Suisse rocked stock, bond, and currency markets, catching many hedge funds off guard and leaving them with unexpected losses. Hedge funds retrenched after getting pummeled during wild March. Plus, Wall Street and numerous hedge funds are lining up against SEC Chair Gary Gensler to overhaul the U.S. stock trading system. They do not like that Gary Gensler is potentially trying to take a step forward to help retail, especially in the time where hedge funds, market makers, so on and so forth, and big players are not doing well. Now, Citadel Securities, speaking of this, unpurchased liabilities, aka debt trajectory over the last 5 years was at $22.3 billion, $25 billion, $57, $65, and now $83.2 billion. So the liability sheet sold not yet purchased securities is just rising. Whatever Citadel tries to tell you, they are absolutely trapped in short positions, and this is rising. They continuously are digging themselves a deeper grave. It's well below 6 feet. If AMC rips, if GameStop rips, speaking of that, Gary Gensler, the rules that are trying to come into effect are really going to hurt Citadel, which is an important thing to pay attention to because they are writing letters back to back to the SEC trying to stump these rules and not let them slide. This is going to hurt Citadel. This is going to break Citadel if AMC and GameStop or Bed Bath & Beyond actually does start to take off and retail gets what they deserve. Now, US March ISM manufacturing PMI falls to 46.3, the lowest since May of 2020. A $70 billion real estate trust has restricted redemptions for a 5th straight month. Why restrict on outflows? Because banks have major unrealized losses from treasuries and now major cracks in commercial real estate are more than evident. Powell was right. Pain is coming. Now, is pain already here, as it took 215 years for the US to acquire its first $7 trillion in debt and just 2 years recently to add another $7 trillion to its spiraling debt mountain? Take a look at this disgusting chart of the US debt. Moving on, in March, US banks lost $390 billion in deposits, the biggest monthly decline in history. By comparison, not a single monthly decline in 2008 exceeded $100 billion since the recent high. Total deposits in US are down from a record $1 trillion, but where did all the money go? Most of this money went into the money market funds and treasury bonds. Meanwhile, gold is set to break 2,000 while Bitcoin gained 45% in March. And before we get into the charts, just a little sprinkle on top. Touching on more layoffs, but a major American company, McDonald's, has temporarily closed all of its offices and is expected to announce major layoffs as soon as this week. Touching on AMC's chart and GameStop's chart, we are currently trading at $5.01. And just looking at this with no drawings, AMC's at this resistance level. It came up to here, and we have all of this stuff happening with the lawsuit that is just going to make the price go where it's going to go and break where it's going to break. But one thing I wanted to point out with AMC and GameStop, we have a slight descending price, but lowering in volume, which is usually a bullish thing to see. Even if you look at GameStop without the drawings, decreasing volume on a downtrend usually shows a spring to the upside. Now, if you want to know my trades, as soon as I take them and the trades I'm still sitting in or the trades I've cut, make sure to get in the Discord linked under the description. Now, we can touch a little bit deeper on the S&P 500, as this will definitely affect how AMC and GameStop moves. Now, we're trading at 409.57 currently as I'm making this video, and in my opinion, you are in a supply zone. Until the SPY breaks over $420, I don't think anything substantial is happening. However, we broke out of this trend line that you see in the blue, this top trend line, and we came and we based off of it. This is a strong signal for the S&P 500, and I would be looking for a rejection around 420 if the SPY keeps ripping, and if not, come back down to base at 404 before getting another pop. That is just my outlook on the SPY, to keep it very simple. However, you want to look at what the volume closes at today. If it's less than yesterday's, this could be a dangerous thing to see. Could see the SPY start to cool off, but just taking a step back and looking at the economy, it does not look strong as a whole, which would point to more downside for the S&P 500. What is your outlook? You let me know in the comments down below. Overall, guys, this is what I got for you. Hopefully you enjoyed watching or found value out of the video. I love you all. Lottery Stocks out.